You hear these stories about how people have turned a small amount of money into millions of dollars in crypto. The question is, how are they doing it? In this video, I'm going to show you my process for how I find undervalued cryptos before the mainstream finds out about them. And make sure you stay to the end because I'm also going to show you some cryptos that I'm invested in right now. So first thing you're going to ask yourself is, why should I listen to this guy? Well, I've been in crypto since 2017. I purchased Binance at $19 a coin, went to well over 1,200. I purchased VeChain at under a penny, went to 28 cents. And those weren't just luck. I was able to use specific criteria to identify outsized returns by using a particular process to analyze coins that I'm going to show you right now. In fact, I've done more than a 10x return on over 24 cryptocurrencies, and I've had a number of them do over a 50x return. And now I'm going to show you my exact process. But first, I just want to say this is not financial advice, and this is for educational purposes only. Now look, the goal is not to buy a coin that's already pumped 100x. That is a recipe for getting wrecked. It's all about identifying undervalued opportunities and narratives that are just taking off. You've got to be like Wayne Gretzky and skate to where the puck is going, not where it's already been. So the first thing I want to talk about are narratives. This is where 90% of people go wrong and where all of the mistakes are typically made. Meme coins, AI, robotics, these aren't just buzzwords. This is where the attention is flowing. And where attention goes, capital flows. The reality is crypto is a reflection, almost like a leveraged reflection of the world around us. When AI dominates headlines in the mainstream media, the AI coins pump. When robotics dominate headlines in the mainstream media, the robotics coins pump. Now, do robotics and crypto really have anything to do with each other? I would say no, but that doesn't matter in this particular case. It's where the attention is flowing. The key is to be ahead of the narrative or very early on, not chasing to catch up at the end. Let me show you some examples of real tokens that follow this exact model and trend. So this is a token called Virtuals, which is an AI agent launchpad. Essentially, it allows people to launch these AI agent projects and cryptocurrencies, and people invest in them before they even become sort of public knowledge. Now take a look at the return of this token. It's up a staggering 13,000%, and it's not that old of a token. We're talking about 2 years old, this token. But nothing really happened for a long time. Take a look at this chart. The price just kind of sat on a very low range. And all of a sudden, as AI became very popular in the mainstream media, this token went from 5 cents in October to essentially almost $5 for $4.50 by January. That is insane. But what goes up must come down. And you can see that here. AI started getting a lot of FUD. People were talking about how it was overhyped, overblown, and the stock market, AI stocks came down a little bit, and Virtuals was no different. Now, crypto is typically a leverage play on anything, meaning you could make a lot more money, but you could also lose money much faster. And look what happened here. If you chased this narrative and you bought it at $4.50, this thing went straight down over the next few months, down to 45 cents. Then AI started picking up, down and up again. So that's what's going to happen with narratives. Let's take a look at another one called SPX 6900. It's a meme coin. It has no functional purpose, but look at the run it had. Here we are in early September with the price at 0.008, right? A fraction of a cent. It spiked up massively to 90 cents, dipped a little bit, and went all the way up to $1.35. There's a couple of famous people online that made tens of millions of dollars off of this trade. And if we look why, meme coins started spiking on Google Trends right about here. This is usually an indicator that you're either about to have a run or you're too late. Like by here, January 19th, we peaked, right? If we look over here to find January 19th, look what happened. Straight down. The attention was over. We went from ridiculous search volume to nothing on Google. This Google Trends can actually be a good barometer for where we are in a particular narrative. But unfortunately, sometimes it's only useful in hindsight. So you're probably asking yourself, how do I figure out what the next narrative is? Well, the reality is you're going to hear about a narrative in everyday life pretty quickly. When AI starts taking off and it's all over the mainstream media, that's typically the time to get in. Obviously, a little bit sooner would be better, but you got to get in early on these narratives if you want to have those asymmetrical gains. One that just popped up that I think is going to continue, at least at the time of this recording, are robotics. Robotics are everywhere. All these companies are releasing robots. I actually already pre-ordered one, the Neo bot. Let's see how good it is if it ever actually arrives. Tesla has a bot coming out. All these robots are coming out. Again, crypto has basically nothing to do with robots. I don't think robots are going to be accepting crypto anytime soon, but that doesn't really matter. Robotics coins are going to matter a lot, at least in the short time horizon at the time of this recording. Another one is AI. I don't think AI is going anywhere. You're going to have it go up, go down, go up, go down. But if you can catch it in a lull before we have some next big breakthrough in AI, I think you're going to be able to have a lot of upside opportunity in AI. Now, there's also narratives that are sort of exclusive to crypto as well. Things like DeFi, decentralized finance. That's a narrative that spiked unbelievably years ago, came back down, spiked again. That's a narrative that I think will continue to perform well, but you're going to have these peaks and valleys. That one you're probably not going to hear about on CNN or Fox News, right? Because it's so specific to crypto. Now, for the harsh reality. You are likely never going to find a coin anymore that does a 20x, 50x, 100x that's sitting on Coinbase right now or sitting on a major exchange. Most of the trading in crypto happens what they call on-chain. It's swapping between two cryptocurrencies. People don't use centralized exchanges for a number of reasons, and likely the coin you're looking for that has that asymmetrical return is not on Coinbase. Now, it's true, buying a token that's not on Coinbase is more difficult, but it's not that hard. And it's actually a good thing if you want these asymmetrical returns because you're getting it before the masses even has access to it. Let me show you how that works. It's key to understand this concept because it's going to give you a massive advantage. A lot of crypto is trading where you're actually using your US dollars on something like Coinbase and purchasing cryptocurrency. There's a lot of challenges and a lot of reasons that coins that you want that are going to do a massive return are not on there because basically the info is already out. Right? The genie's out of the bottle. People already know about it. The rest of crypto is done via swapping, where you're swapping one token for another. This is where most of the volume actually happens in crypto, and it's not that hard to get into once you understand how. But let's break down what's happening here. Try to imagine a digital account filled with two assets, 50% of one and 50% of another. Let's, for this example, use dollars and euros because I think it's easier to understand in a traditional finance application. Every day, people want to swap between the two. Or you're going on vacation, you have dollars, you're going to Europe, you need euros. Or you're doing business overseas, you need to convert those dollars to euros. And every time you swap between dollars and euros, you pay a fee, of course, to the bank or financial institution that's helping facilitate the transaction. What's so cool is regular people can participate in that exact framework in crypto. So take a look at the blue circle at the bottom. That's a liquidity pool in crypto. 50% of one asset, 50% of another. Let's, in this example, use Bitcoin and Ethereum. On the left side here, we've got the liquidity provider. Anyone who wants to participate in this payment network can. They can take their assets, like Bitcoin and Ethereum, and deposit it into this pool with hundreds or thousands of other people. And what happens is a trader comes along who has Ethereum and wants Bitcoin. They need to swap between the two. Or they have Bitcoin, they want Ethereum. So they use the money inside of the pool to facilitate the swap. And of course, since it's a service they are leveraging, they are going to pay a tiny transaction fee. That fee is going to go to us, the liquidity providers, or people that participate in the pool. Pretty cool, right? Now let me show you what's possible. You won't believe this at first glance because it seems ridiculous. But these are my real life results. I've got about $40,000 spread just through these pools. I have other pools, but here's the example I'm going to use. And the dividend, the yield that's being generated is over $100,000 a year. It seems ridiculous and absurd. But the reality is there's so many people swapping cryptos all day that I'm basically the Visa or MasterCard in this situation. I'm taking a tiny vig of every transaction. Now, if you want to learn how to do this, instead of the bank taking all this money, you are earning this money, then I definitely invite you to schedule a call with me and my team because we have a DeFi accelerator program specifically for accredited investors or business leaders that want to understand how they can deploy portfolios just like this. We'll take you through from a total novice, step by step, to deploying your own DeFi portfolios and being able to earn yield like you just saw. Now I'm going to show you how I do my research to find undervalued tokens step by step. I'll also show you how we actually facilitate a swap, how you can do this. So this site is called CoinGecko. It is basically a terminal that gives you a lot of information on basically every crypto out there. Now, if we scroll down below, we can see there's categories. You can think of these as narratives. So you've got smart contract platforms, layer ones, proof of work, etc., etc. Typically, the number one platform at the time probably isn't the place to go because it's already sort of exploding. Now, we can scroll down and look for more and more and try to find one that might be interesting. But something I like to do is look at the 24-hour volume. This way you can start to see where the money is flowing. And there's two ways to do this. Number one, filter by the most volume. And number two, also you can filter by the least volume, because this is where you might find something that's either depressed and going to pump back up, or you might find an opportunity before everybody else does. Now, right now, the market has just had a major pullback at the time of this recording, so most of the money's flowing into what they call stable coins, which are coins pegged to a US dollar. There's no upside here because they're literally pegged to a dollar. They're not going to change in value. So let's go down a little bit lower. As we go down a little lower, we see a narrative we're familiar with just from the mainstream news. Remember, artificial intelligence. Let me open that up. These are coins that are categorized as AI coins, coins that have to do with AI. And we can start to look through them and get an understanding. Now, the market cap is going to be critically important, which is this category here. If you're looking at market cap, that'll tell you how large the token is, the total value. So this one is nearly 4 billion. It's not 100% guaranteed, but typically the larger market caps are a little bit more stable. Now, everything's very volatile in crypto, but if you're looking at a $4 billion asset, that's usually more stable than an asset that might be worth 100 million, just like in traditional finance. The smaller the market cap, the bigger the potential upside, but also typically the bigger the risk. Now on here, we see one called Virtuals, which is the example we looked at before. So let me click on Virtuals. On this page, we get a lot more information about Virtuals in terms of the market cap, the 24-hour trading volume, etc. But what I like to do here is actually go to the website for the actual company to get an understanding of what they do. So if we scroll down lower, you can see here is the website, and I'm going to click on that to get an understanding of what this is all about. Now, this may look confusing at first, so you have to spend some time researching these projects. But what I know, because I've been in this industry, is Virtuals is an AI agent launchpad. So it's one token, right? But people launch their own tokens on here. All of these tokens were launched on the Virtuals ecosystem. So Virtuals is sort of the pick and shovel strategy, almost like Apple in this case, where they have iOS and you can build your own apps on top of it. That's kind of what this is, because all these coins were built and released on the Virtuals platform. So you can see we're going one level deeper. We've got the AI narrative, we've got the big player, which is Virtuals, and now we're looking at assets that are very small in this ecosystem. By default, this is going to show you trending. So you've got Game here at a $40 million fully diluted value, VPay at 17, Tibber, which is Rabita, 332 million, a lot larger. And we can see the price over the last day. Some of these are jumping up significantly in price. This is a one-day gain. Now let's click on one to get a better understanding of what's going on here. This one's called 717 AI. The ticker is WIRE. And we can kind of get a look at the chart and see what it looks like. So if I zoom out on the chart, we can see what this looks like. Wow, this has had a massive rise over the last, 5 months, 6 months or so. Full disclosure, this is one that I am heavily invested in. I like this coin a lot, and it's one I've been holding since all the way back here. So this has done phenomenally well. Now, at least on this platform and everywhere, essentially, you want to click on this little icon. This is the Dex Screener link. Dex Screener is one of my favorite crypto apps. It allows you to see charts and information on a particular token. It lets you create watch lists and alerts. This is one of my favorite tools, and it's completely free. Dex Screener gives you a lot of information. The chart's in the middle. You can actually see the orders going through here. Every order that comes through, we just saw one. Somebody sold a penny's worth, another penny, right? We can look at this in real time, see people buying larger amounts. You can even look at the holders on here, which will show you who is holding what. That's what's so cool about crypto. You can see the wallet addresses. We don't know their identities of these people, but we see the wallet addresses and how much they're holding. It's pretty impressive. Now, there's two major things I want to call out here. One, their website, and two, their Twitter. This profile is claimed, so we can look at their website and their Twitter. What does this company do? Just like you'd research a stock, what does this company do? So we're not going to go through an entire research process here, but we would learn what the company does and some major things I like to look at. What does the company do? Who are the stakeholders? Can we find out who the team is? One of the best ways to do that is go back to Deck Screener and click on their Twitter. Sounds crazy, but crypto revolves a lot around Twitter. So this is a very helpful way to figure out what they're actually doing. What I like to do is to see first, are they active and what are they doing? So they posted something 22 hours ago. They posted something again the day before. They seem to be somewhat active. Now, most of the time, they'll actually have a link tree in here, which opens up to other links that you can look through. They've got their website, Telegram group, a Discord group. So if you're really thinking of investing in a token, you can join their Telegram or Discord and talk to other people that are investing in this token or in that community. That's a great way to get an understanding of who the team is, what their goals are, what's their roadmap. And unlike stocks, you can get information before the general public has it. And there's no rule, at least at the time of this recording, to leverage that information to your advantage. Now, let's say I really like this token and it's something that I want to consider buying. Well, one rule of thumb is I never buy when something's up 28% on the day. I'm just not going to do that because typically there are big moves up and down. If something runs up pretty dramatically, the chances like from here to here, it's going to come back down significantly. That's typically the buying opportunity. I hate to buy when things are up. I actually bought more yesterday. Everything was down yesterday because there's sort of a macro market pullback. So I thought it was a good buying opportunity and it's gone up significantly. That's where I'm buying, not up here. I don't want to buy up here. It's gone up too much too fast. We'll see if it retraces a little bit. So in this example, and with small caps, I like to look at them by market cap, not by price. Here's why. When they're really small, it's very difficult to understand the prices because here it's 0.00263. Here it's 0.00. Like it's difficult to look through all the zeros and try to get an understanding of where it is. Market cap is much easier because the market cap's directly related to the price. So I think that's much easier. For example, if I buy this at an $8 million market cap and it goes to $16 million market cap, I've doubled my money. I don't care if the price is 0.002 to 0.004. Too difficult to look at it from that perspective. I just like to look at market cap. That's me personally. Now in this video, we're not going to get into reading charts specifically, but I'm going to give you some general chart reading. So if you kind of use this as a line, you can see this is a support and resistance line, right? There's support here and there's some resistance. We're actually reaching another one right now. So there's going to be some potential resistance here, which means it could pull back. So in this example, if I really wanted to get into this token, I might look for something around here. I always like to go a little bit higher, and that's 12.54. 12.54 million, if you can see that on the screen. It's kind of small. That's where I'm going to set an alert. So I'll say alert, and I'll say the market cap goes under 12 million. So now I've set an alert. So the market cap's going under 12 million. I'm going to get an alert for that. This way I can actually look and see if I want to buy it then. That's a really helpful way for me to keep track of prices without checking every day. You can get this as an app on your phone as well, so you're logged in, and that will give you the ability to know what's going on in the crypto landscape. Hopefully that's helpful for you. Again, I don't like to buy when something's up 30% on the day. I like to buy it when it's down. One of the hardest things in crypto is being patient, right? Being patient is so difficult because you're going to get this FOMO feeling. Especially, here's a perfect example. This thing went from 500,000 market cap up to 10 million, did a 20x. Now, the right move in this case was just to wait, and you had to wait a while. You could have waited from August, literally only a week. It's not really that long. You would have got it at less than half. If you waited even longer, you would have got it at a fraction of the amount. So that's actually what happened in my case. I saw someone that I'm following talk about this coin at about 1 million market cap. I missed it. It went to 10 million, but I was patient. I was patient. When this thing came back, I didn't get at the very bottom, but when this thing came back to about 3 million, I started buying. I bought more on the way down, and then I did a fantastic, basically a 10x return, 12x return on this. Now I'm going to show you how to actually purchase a token. I'm not saying purchase this token. I'm just showing you how to do it. So this website's called Uniswap. It's one of the biggest swapping websites. You can swap pretty much any token for any other token on a particular chain, but let's not get into that for now just to make life a little bit easier. So here's one of the biggest mistakes people make is they're going to type in wire into the chat here, right? Here's the challenge. Look how many wires there are. Now you might say, oh, I can recognize it because I recognize the icon. Never trust that. This is a huge problem that happens in crypto. Unfortunately, people create fake versions of the token and you could absolutely buy the wrong one. So you don't want to do that. You never want to type it in. That is a losing recipe. What you want to do is use Dex Screener again. So we're on the page, right? Probably hard to see, but you see over here, there's a little copy button. You're going to click that. This copies what they call the contract address. It's basically like the address of the stock, if you think of it in stock terms. It's the actual contract address. It's a long string of characters here. So what I would do is I would go up here and I would paste it in. Now there's only one, the one that I want, the correct one. So I can click that. That'll bring me here. So let's say I'm ready to buy this, right? I want to buy $20 worth. I type in $20. That equates to about 1,076 wire. It's going to finalize a quote because the price is always moving. I'll click review. There's a fee on this one. That's fine. It shows me, here's what I'm getting. I'm going to click swap. I'm going to sign the transaction here. When it comes up, I'll actually have to sign it. And boom, it's done. It's swapped. I just bought $20 worth of wire. Feels like a lot of steps, but once you get it dialed, it's very, very easy. And just like that, I purchased a token that's not on any centralized exchange with a very low market cap and a high potential upside. Now, of course, I have to mention this again. Trading any cryptocurrency is risky, and it's even more risky if you're trading these small market caps on chain and not on a centralized exchange. Now, let's review the steps. Number one, figure out a narrative that you think is hot or going to be hot. Number two, research tokens in that narrative. You can use CoinGecko to see tokens listed in that narrative. Number three, you research the actual token. Use Dex Screener. You look at their Twitter. You try to understand the team and the product. Number four, set alerts for a price level that you're comfortable purchasing. Don't just ape into it. Don't just buy it when it's up 30, 40, 50% on the day. And then number five, make sure you copy the contract address when you're going to purchase the token so you make sure you get the right one. Crypto is definitely high risk, high potential reward, but understanding narratives and understanding how to do your research can give you some competitive edge. Now, if this was interesting to you and you're interested to learn how you can create your own DeFi income producing portfolio and find coins like this and earn income on every transaction, don't forget to schedule a call with me and my team, and we can show you exactly how we can do that step by step. If you found this information interesting and you want to see more videos like this, don't forget to like and subscribe. Also, feel free to drop your favorite narrative in the comments below, and even some coins you're looking at. I might be able to break down what I think of those coins in another video for you.